Welcome to the Brokers Lounge with Eddie and Carlo. Disclaimer: the information contained in this podcast is general in nature and does not take into account your personal circumstances. Please head to the show notes if you want to book a free call to discuss your personal situation.
Welcome to another week of the Brokers Lounge. In this podcast, we'll be discussing everything commercial lending, and we've got a special guest for this one, our senior commercial broker, Martin Stone. How are you, Martin?
I'm good, thanks, Eddie. Thanks for having me. It's great to be sitting in Carlo's chair as well.
Yes.
It's good. Yeah.
I don't know how Carlo's feeling about that. Well, he's going to have to deal with it. Welcome to the podcast, and welcome to the Brokers Lounge and to Link Wealth as well. You've joined us 5 weeks now.
I think this is week 6.
Week 6.
Yeah, it's flown by, to be honest. So, but it's a great team here. People like yourself, Eddie, and Carlo, of course. Really accommodating and vibrant team here.
Good to hear. So, if you want to give us a small summary of who's Martin and how have you come from 25 years banking experience into the broking world?
Yeah, certainly. So, as you said, I'm I suppose a career business banker. I've worked in the UK and Australia senior relationship manager roles for Westpac, NAB, and in the UK as well. All of that has been in business banking or commercial banking. Had a bit of time with AMP looking after their professional services portfolio for VicTaz. And I guess really for me, I've seen quite a bit of change over that time. So, yes, there's technology and all that kind of stuff, but I think at the lower end of business, borrowers and customers are looking towards the brokers more and more. Obviously, we've seen, and we know stats, 75-80% of home lending and stuff is done through mortgage brokers. And I think really over the last few years, we've seen a greater shift and progression towards business customers, trading businesses and the likes, using mortgage brokers to get the best deal out of their bank.
Yeah.
I certainly think that banks have changed and embraced that distribution model. My last portfolio at Westpac, the vast majority of my customers use mortgage brokers. For me, the passion for me in banking or broking now has always been about the relationship with the customers, building that, helping them achieve their own financial goals. Whereas before, when I worked for a bank, it's like you have your own bank's credit policy and limitations on what you can do. Now I've got whole of market.
Yeah, absolutely.
And the benefit through to the customer, and not just in terms of pricing and making sure we get the best price for the customer, but also having access to that whole of market offering that is out there is just fantastic. And it's so much more powerful.
Yeah, 100%. And that's something I always say. And like the finance bit, I say boring. It's not really boring. It's just, it's not what attracts me and what keeps me going. It's just the relationships you build with people, whether the people you work with or your customers.
And growing with them.
Absolutely.
Helping them achieve their goals and their growth. And especially with business customers as well, you tend to get continuation.
Exactly.
So you might have a family business that's passed down through generations and generations.
And then they change your department or portfolio, and then you lose all that relationship.
And in business banking, that's too true. Like I had customers at Westpac. You look after them. This isn't just Westpac. All the banks are the same.
Yeah, exactly.
But you look after them, you're going great, and then suddenly they want to buy a new property. So that's an extra couple of mil these days in terms of term debt, and that pushes them into a new sector. So they get new relationship manager, new change, and all that kind of stuff, and
you lose the relationship.
It's frustrating for you as a banker. It's frustrating for the customer. But from the broker perspective, now you just get to look after them.
There you go.
It's really good.
The world is your oyster.
It is. The world is my oyster, yes.
So if we are to jump into commercial lending, what is commercial lending? What differentiates it from residential lending that most people know about?
Yeah, look, it's not a one size fits all answer, to be honest with you, Eddie. There's a number of aspects that would determine something as business lending. You've got the legal, the compliance framework. Most business lending isn't covered by the NCCP or Consumer Credit Act, that kind of stuff. It's not to say it's not regulated. There's voluntary codes of practices that all the banks have to subscribe to, the Banking Code of Practice and the likes, and that sets out a framework, I suppose, in which banks are supposed to or expected to deliver their services and abide by. Yeah. So really for me, commercial lending would be anything that is where the use and the repayment source are driven by personal things. So whether it's a PAYG or salary type income coming in to service the loan, or whether it's maybe a rental property, that kind of stuff, that's all personal lending. Business lending is where there's a trading business or a business venture behind it that is ultimately your source of repayment.
Yeah, I guess it's the purpose behind lending. And if you're, like you said, doing stuff for personal use, if it's a residential property, then it's residential lending. When you tap into business and commercial property and business cash flow and asset finance, that's where you tap into.
Yeah, absolutely. So, businesses will need commercial property to trade from and that kind of stuff. But the repayment of that is the successful nature of the business.
So maybe since you're talking about this, maybe it's a good time to discuss like the different types of commercial lending. So commercial property is one of them.
Yep.
So what's like a commercial property other than your warehouse, office?
So yeah, commercial property, that could be anything ranging from sort of office buildings to warehousing to manufacturing plants to, even if you're talking like rural and agriculture, to farmers' fields and stuff like that. That is all specialised commercial property.
Even bigger developments, I guess, as well.
Yeah, and then so on the residential, on the house building side as well, certainly. So under consumer borrowing, most banks will typically give you the ability to build, say, 3 units under a consumer regulated type product, under a home loan product. If you're a builder and you're building 3 or more, 5, 6 townhouses, or even a big block of apartments, that will be deemed a commercial proposition, and commercial debt funding comes into that. And then there comes with all lots of other sort of requirements that you probably wouldn't need under a consumer credit loan around monitoring the costs and valuations and all those kind of things.
Yes.
There's an element of that grey area. When we're talking resi development, yes, you can do some stuff under a consumer credit type home loan product. Other stuff is a business debt type stuff. Term funding. So very often, we touched on it earlier, businesses will need a property to trade from. So they'll buy a property, they trade from it. That debt will typically be shorter in nature, shorter in term rather, than a home loan. So we're talking up to traditionally sort of 15, 20 years. These days, some of the banks are actually offering longer than that. And especially if you can put some residential security in support of the loan, you can get up to 30 years on a business loan type product. Other aspects of business lending, working capital overdraft type requirements. So businesses need cash to trade. That's everyone talks about profitability and viability through profit, but at the end of the day, cash is king. That's one of the first things, you're taught as a banker is cash is king. Cash makes the repayments, not profit. So banks will provide working capital type facilities. Now they could just be an overdraft facility, or it could be something that's maybe a little bit sexier, like invoice discounting, where you're actually looking at the assets or the invoices in that case of the business that the business is sending out, and using those to leverage some debt, and that can help that working capital type funding. So overdrafts are one thing. If you're a manufacturing business, your cash requirement isn't just the buying and selling of raw materials and final goods. You've got holding costs of stock. You've got maybe the customers that you're selling to are squeezing you in terms of like timeframes that they're prepared to pay, and suppliers as well might be wanting money sooner. So all of those come up, part of the cash trading cycle.
Yeah,
all of that can create a borrowing need.
absolutely. There's heaps of aspects in any business that will need funding along the way, and obviously businesses that are experiencing a growth in their trading, they will definitely need funding because we work in business and we see
Yep.
it. And once you're trying to grow, you need to buy that next office, or you need to buy that next machine or asset, or you need the cash flow to fund your project. So funding is key, and like you said, cash is king.
Cash is absolutely key.
And I think I've seen that a few years back. Like, I reckon in the first 2 years of business, 80% of businesses fail due to cash flow issues.
Yep.
And that's where it gets a bit tricky, where if you're starting your business new, sometimes getting lending can be hard because especially big banks.
There's no track record.
Exactly. They want to see your financials. They want to see your past year or the last 2 years, or how your projections are. And it's so hard within the first year to get that done.
It is, and you're right. And that's actually probably a nice sort of definition or way of separating business lending to personal lending. In business lending, the banks will look backwards. They'll look at your past record, your track record, and use that to demonstrate or to determine what their appetite to lend funds is. Whereas in consumer lending, you're really looking forward. You sort of take your PAYG salary, you're looking forward.
Absolutely.
That kind of stuff.
And you get funding based on how the business is going to perform in the future. And if you've got a good relationship with your broker and they've got a good relationship with the bank, they probably can represent your case in a good way and show how the figure's going to stack up to be able to meet your repayments or get the borrowing needed. So it's a key part of lending. I guess these days I'm seeing a lot more favourable commercial policies and favourable commercial rates and fees included in specially secured lending in the commercial space. Like, if you go a few years back, commercial was a lot more expensive than residential. These days, like, I've done one not long ago, they've got a better rate on the commercial property that they purchased than the home loan they've got. And like, with no valuation fees, with no, like, 30 years, 80%, it's like residential lending. So are we seeing that more these days?
I definitely think we are. As you said, go back a few years, business margins were much bigger than consumer home loan type margins. We're seeing competition. There's more competition now. So, in Australia, we've got the main banks, but there's more and more lenders coming in, providing more competition. Competition brings price reductions, basically. Law of demand and supply. I think there's a greater awareness of risks within the banks in terms of risk modelling and stuff like that. And that allows better outcomes for the customer. But the main thing for me is the broker, the introduction of the broker into that business market, because now as a broker, we've got access to whole of market. So, if you are a 20, 30-year customer of one of the main banks, in the past, you're probably not really looking anywhere else. You just go back to your relationship manager who looks after you, and they'll give you the best price they can. And it's really too hard to look at other options because, changing a home loan is quite hard for an individual. Imagine trying to change a business, bank accounts, all those monies that are coming in and going out. It's a hell of a job. So people are naturally scared of looking at that kind of change. But now with the brokers coming in, we've got the ability to look at it. We know where that pricing sort of pitch point is. We can tell when a bank's a bit overweight in the pricing. We can help bring them down and help give that customer a better angle.
Yeah, absolutely.
More and more, resi security has always been used by borrowers to support business loans. Again, in the last 10, 15 years, we've seen a massive increase in house prices. So if you think, business loans have generally been up here in terms of amount, with home loans down here, house values are now coming up. You're able to get more security for your business loans. Banks will always price a secured business loan
always
cheaper than they would an unsecured one.
Absolutely.
So that helps as well.
Yeah, 100%. And I think there's a lot more happening in the commercial space, especially from a broker side of things. Like more brokers are tapping into the commercial space, and it's just natural, I guess. Like we see a lot of people through our day to day, and a lot of them are self-employed, and they need that option of getting lending for the business to grow the business. And a lot of them are not managed by bankers at the bank if they're smaller businesses or if they're starting. And a lot of them, they don't know about other options. Like they deal with X bank and they know that's the product there, and they told them, "Oh, no, you can't get an overdraft. Oh, no, you can't get."
And it's it's almost like a self-fulfilling prophecy for the banks, really. You know, the banks have just jumped onto the broker distribution type model, and you know, the shareholder expectations of all of these big banks. You know, the dividends, all that kind of stuff. The ability just to pay out when a deal comes in is quite attractive, considering the option is paying, you know, decent salaries to staff, whether or not they bring in new business.
I believe the commercial lending space is evolving very rapidly, and over the last few years, more and more of the market share is being captured by the brokers on the commercial space. So residential space, brokers, like you said, they do 75 to 80% of the market share, but even in the commercial space, that's growing rapidly, and I think it doubled over the last few years. And it's natural in a way because you're dealing with all these self-employed clients, which they need commercial lending, and you've got the relationship, you understand the business, you understand their personal life. It's just a natural way of extending that service you provide and doing more and more in that space. So I guess you as an ex-banker having the freedom of looking at all these options, like you said before, can go a long way. So what certain spaces you can see these smaller lenders do that you wouldn't be able to do in the big banks?
Yeah, so look, I think, you know, and you make a great point there, Eddie. Sort of, you know, the big banks, they can pretty much do whatever they want to do, subject to their own appetite. You know, so and from time to time they have different appetite levels for different things, and we've certainly seen in the last few years, especially with the use of technology and that kind of stuff. You know, whether it's automated reading of bank statements, BAS returns, that kind of stuff. The ability to deliver a lending product or a lending solution now is phenomenal compared to what it used to be. A lot of it is, you know, AI is taking over the world. It's taking over banking as well. But there's still stuff that the banks generally don't like doing. Now, you know, whether that's the sort of the more short-term type cash flow type lending, you know, there's lenders out there now that will give you, not so much with no questions asked, but the bare minimum of questions asked, compared to the banks. You know, the banks will want a lot of information from you.
So but it all comes with a price, right?
It absolutely. So they'll no questions asked. Here's a sum of money. Does it meet sort of their predetermined criteria? Yes, it does. Well, here's some money, and yes, the price will be 2 times, maybe more than that, in terms of what the banks will charge. But that comes with a benefit. It's the trade-off. You know, it's that kind of stuff. There's especially in the property market and development, I've seen a tightening of the screws there. You go back 10, maybe not 10, 15 years or so, if businesses or customers had assets, you could pretty much give them a revolving type facility against, you know, 80, 70% of a property. No questions asked, shopping bucket type facility, you know, whatever you want to call it. They had the money there, and you just keep renewing it. Part of the, I suppose, especially post-Royal Commission as well, there's been a big shift in focus in being able to demonstrate an ultimate repayment capacity.
Yeah.
So, you know, back in the days, you might have said to a guy, yeah, they'll be fine. They've always paid us back. No issues with this guy. You know, he's good. Give him the money. It works. These days, no. You really got to be able to demonstrate that repayment capacity. And so when it gets to things like residential property development and stuff like that, banks are probably coming a little bit less aggressive than they used to be. So that's created a niche or a market now for non-bank lenders to come in, a bit of private capital, that kind of stuff coming in and helping people will achieve their projects, their goals, their dreams in ways that banks now don't have the appetite to do.
Yeah,
and that's phenomenal as well, because it keeps the world ticking over.
Yeah, as long as the business knows they can afford those repayments, because like you said, it can be a lot more expensive.
Yep.
It's a short term, 12 months term that you need to repay that loan back, but on the other side, they can fund you in 24 or 48 hours.
Yeah,
it's
speed to market is phenomenal.
Some of them, they're just crazy. Like, we'll just see the bank statements. Yep, no worries. Here's your $50,000. Here's your $80,000. Here's your $40,000. And
it'll be in your bank account same day.
Exactly.
In a number of cases.
So, and as a business owner, you might need that injection straight away to cover a gap.
Things happen in business, I mean, as we said before, cash is king. I've seen more businesses, and you mentioned startups earlier, Eddie, as well. I've seen more businesses fail because of the insufficient cash than a lack of profitability.
Absolutely.
You can be profitable and not have any cash floating around. So the ability to, you've got a key supplier to pay. You're relying on somebody, one of your customers, your biggest customers, saying, "Yep, I'll pay you Friday." That money doesn't come up because things happen. You need cash. You need to keep your supplier happy. Otherwise, you're going to lose your terms and all that kind of stuff. So yes, you might be able to borrow money and it's 10, 12, 15%. But the actual value in maintaining that relationship with your supplier or whatever it is worth far more than that. So then your money comes in from your customer, you pay the money back, and we move on. It's that kind of sort of bridging type finance that a bank might look at it and go, "That's just a bit risky for us," Or even if they got there and you got a good banker and you got a good bank, they'll probably get there. They just wouldn't get there that day.
Yeah, absolutely. It takes a lot more for the bank to process things than those small lenders.
Yep.
You've mentioned something earlier which I find really interesting with the line of credit or the revolving facilities. Are these being offered less and less and less by banks, and they going more towards the term secured lending, or is it exclusively for big businesses that they've known for years and they've seen their profits and they know they're banking inside out, that they're comfortable to give that facility to them?
I think we're seeing less and less of them. And look, a number of them certainly used to be in and around the property side. So, you'd gear up against property and someone would say, I might want to buy another property. I just need that instant access to cash.
Yeah.
We are seeing less and less because it is harder in those kind of situations. It is harder to be able to determine and show how that facility is going to get repaid other than the sale of the asset. And banks now don't want to be pushed down the road where they're looking to sell assets to repay facilities. We want to know. So I keep saying we. I'm still only 6 weeks in, Eddie.
That's all
right. Banks Banks want to know that they will get repaid.
Yeah.
They don't want to be in the position of realizing security to get their money back.
Yeah.
And that's the other thing around business lending. Generally, terms are shorter as well.
Yeah.
I used to get so often as a banker the fallacy that people coming and wanting interest only, and it'll be, surely you want interest only because the bank makes more money, because the longer you have the debt out on interest only, you're getting more interest income. It's like, yes, you're right, but when it's not secured by a residential property, appreciating property asset that is only going to improve your position over time, if you haven't got that security, the risk of not getting paid at all increases the longer you have a loan out. So businesses generally have shorter lifespans.
Yeah.
If you talk about opening a restaurant or a nightclub or something like that.
Also, it's very industry specific.
Absolutely.
Like you said, some industries, like you're running that business for 3 years, 5 years.
You can.
Other businesses.
But there's great opportunities in business. Everything comes in cycles.
That's right.
So there's great opportunities, but you're only at the top of that cycle for a few years. So, and the nightclub, the bar type thing, that's a great example because
but it's very short lived.
It is. Nightclubs are trendy for 6 or 7 years at most.
You're
2 or 3 years.
You're probably more into nightclubs.
Yeah, I think you're a bit closer to nightclubbing than I am, Eddie. Those days are long gone.
Same here.
Probably pretty close to picking my kids up at 2 a.m. outside one, but Anyway,
Looking forward to that.
Yeah, where it's sort of where there's a trend element to the business.
Yes.
You know, you need to be repaid quickly because otherwise you've got the chance of not getting repaid at all. So.
Yeah, absolutely. Look, I guess the commercial lending is a lot more involved. Like I know very successful commercial brokers that they specialize in commercial lending and they love it. It's like an art to them.
Yep.
Because each business is different, each case is different, each scenario is different, how you're going to structure it, how you're going to do it, how you're going to put it. So I'm pretty sure there's a lot to talk about and a lot to learn. Unlike residential, it's a bit more straightforward, black and white, what you can, what you can't do. There's always ways of doing things, but generally speaking. So I guess we're going to be doing a lot more
I hope so.
of these things.
I
Just
hope
get
so.
into more, probably next one, into more policy, get into more like some niches out there that people are not aware
Different
of.
product types, what can be used, even different borrowing requirements as well, because that's probably, you know, we all see debt as I need to buy something. I need debt to help me. The great thing about business borrowing is that the borrowing need can actually come from something when there isn't actually a purchase or a transaction behind it. You know, we talked earlier about customers lengthening their terms or suppliers wanting to get paid quicker. For a business, that can be pretty damaging in terms of their own cash flow. You know, if they've got customers, they've got a big, and farmers to supermarkets, a perfect example, right? So Woolies, Coles, they have all the power in the world. They can pull out their
100%.
terms to suit them. The farmers or the wholesalers, whatever it is, have to go. And on the other side, if they're getting, you know, their suppliers are wanting to be, for raw materials and stuff, are wanting to be paid sooner. You're getting pinched from both ends. That creates borrowing opportunities and borrowing needs. And that's really where that, on the business side, it's such a great place to be for me because you can be involved in all aspects.
Absolutely.
It's a sort of a recovery and a growth type.
Absolutely. And I guess that, like, just to finish here, I guess if you're a business owner, you need to have a great relationship with your broker, and they need to be involved in your personal and way of thinking and what are your pain points in business, because there might be something done to address them and make them better and work better solutions than what you've got at the moment. So having that close relationship with the client and the broker can go a long way, and finding these solutions. So it's just start the conversation.
Yeah, you absolutely need somebody who knows the market, knows the products, all that kind of stuff, but knows you as well as the business
and
understands what you need, is working for you, not against you. You get all that in place, and the world's your oyster. And I think really that's the advantages now of having that commercial capability on the mortgage side is, we said it before, I've got a whole of market to look at. I haven't just got one single bank's lending policy that I need to try and work out how to best squeeze a deal into. We've got whole of market, we've got experience, and it's just a fantastic place to be in with some great opportunity as well.
That's it. Anything else to add? Or
not for me, but thanks, Carlo, for the chair. I'll be sitting this again very soon.
Yeah. All right. We'll end it up. Thanks, everyone, for listening. Please don't forget to subscribe and leave us any feedback or any questions. And look forward to speak to you all soon. All the best.